All right, listen up. If you're a trader with a small account, but you've got those big ambitions, this one's for you. We're not going to talk about some $1 million fantasy here. No. We're talking about a real, actionable strategy for turning a handful of dollars into a rock-solid foundation. Because let's get one thing straight. In the market, your starting capital does not define your potential. Your strategy does. So let's dive right in. I want to paint a picture for you. It's a true story. Imagine two traders, Kai and Min. Both of them start with the exact same amount, $100. And both are just full of that fire, right? That determination to turn this small stake into something real. But after just a few weeks, their paths, they just split dramatically. Kai turns his $100 into $180, then $240, and just 6 months later, his account is sitting at a cool $1,200. And Min? Well, Min blows his account, not once, 7 times. So, what on earth happened? I mean, think about it. Same starting line, same amount of money, same raw hunger to succeed. Why would one person flourish while the other just crashes and burns repeatedly? This is the question we need to unpack. It really all boiled down to a single, powerful word: strategy. You see, Kai had a strategy. Min, well, he just had emotions. Kai had a set of rules. Min just had hope. Kai was totally okay with moving slowly, like the persistent tortoise in the story. Min, he wanted to get rich yesterday. He was the hare, sprinting like a madman without even looking at the path ahead. And as we all know, the market always, always punishes the impatient. And this brings us to the most critical starting point of all, what I call the survivor's mindset. Seriously, before you look at a single chart, before you even think about placing a trade, this is where your journey has to begin. See, a trader with a huge account, they can afford to think like an investor, right? They can weather the storms. But a trader with a small account, you have to think like a survivor. Now, this requires a complete shift in how you see things. Stop thinking of that $50 or $100 in your account as a weakness. It's actually a gift. I know, it sounds kind of paradoxical, but hear me out. Small capital forces you to develop the exact habits that traders with big accounts often have to learn the hard, painful way. It forces you to be sharp, to be intelligent with every single move, because you simply can't afford a lazy mistake. You can only afford the right strategy. Let's just be real for a second. The harsh truth is that something like 95% of new traders lose their money. But you know why? It's not because the market is rigged against them. It's because they're applying big capital strategies to small capital accounts. It's kind of like showing up to a Formula One race with a scooter. You don't lose because you're a bad driver. You lose because you brought the wrong vehicle for that specific race. So the most important thing you can do is change your primary goal. In a survival game, you don't have to win every single fight. You just have to not get knocked out of the game. Your mindset has to shift to this, right here. Not losing money is a victory. Earning money is the reward that comes after. Protecting your capital is everything. The person who can stay in the game the longest is the one who ultimately wins. It's that simple. There's this great story about a famous Japanese master builder. Someone asked him, "What's the secret to your buildings that last for centuries?" And he said, "I just focus on the first brick. If that first brick is laid wrong, the millions of bricks that come after it are completely meaningless." For you, as a trader, your mindset, that's your first brick. If you get that wrong, every fancy strategy you try to build on top of it will eventually just crumble under pressure. So let's boil this new mindset down into 3 core principles. First, and this is a big one, you trade with a strategy, not with that desperate need to win back whatever you lost. Second, you trade less, not more. Look, overtrading is what kills small accounts. It just leads to decision fatigue and emotional mistakes. You have to be selective, like a hunter. And third, you have to treat every single pip, that tiny little unit of price movement, like it's precious. For a big account, a 10-pip move might just be noise. For your account, it's a lifeline. Okay, so we've laid that mental foundation. Now let's pull out the map. These are the core survival rules that are going to guide you through the treacherous parts of the market and help you steer clear of all those deadly traps that catch most new traders. I want you to think of your capital like a farmer who's down to his last handful of seeds for the season. Does he just throw them around carelessly? No way. He treats every single seed like a piece of treasure. He plants them carefully because he knows that each one represents his entire future. Your capital, those are your seeds. You have to protect every single dollar like it's the last one you'll ever have. Because in the beginning, it pretty much is. You know, a small account doesn't usually die from one catastrophic bad trade. It dies from 1,000 tiny cuts of bad risk management. So here are the unbreakable rules. First, never ever risk more than 1 to 2% of your account on any single trade. If you have $100, your max loss is $2, period. This guarantees you can survive a losing streak. Second, never average down. I know it feels tempting to add more money to a losing trade. That's just your ego hoping to be right, but it is the fastest way to zero out your account. And third, take only one quality trade at a time. Be a sniper. Wait patiently for that perfect shot. Don't be a machine gunner, just spraying bullets everywhere and hoping something hits. It is so tempting to go searching for that holy grail system, the one with 10 different indicators all blinking at you. But for a small account, trust me, simple beats complex every single time. And why is that? Because a complex system just leads to hesitation, to what we call analysis paralysis. And with a small account, that hesitation means a blown trade and eventually a zero balance. You just can't afford it. You need speed, clarity, and precision. And this brings us to this beautifully minimalist approach I call the one setup strategy. The whole concept is incredibly simple. You trade only one high probability setup. Just one. You practice it, you master it, you live and breathe it, until recognizing it and executing it becomes as natural as breathing. Think of a master swordsman who practices a single perfect strike 10,000 times. That one strike becomes absolutely unstoppable. That's what you're aiming for. So, what does a setup like this actually look like? Well, a classic, super effective example is the break retest. It's so simple. First, you see the price break through a key level, say an old support or resistance. Second, you wait for it to pull back and retest that same level from the other side. And third, you look for a confirmation candle right there at the retest, and that's your entry. This setup is just perfect for small accounts because your stop loss can be super tight, the pattern is easy to spot, and it happens all the time. And you know what? This stuff really works. There was a trader named Hoa who was literally down to his last $6. He'd been losing for months trying all these complicated systems. So he decided to master just one thing, the break retest. In 3 months, he turned that $6 into $64. 8 months later, his account was at $337. Now look, that's not a Lamborghini fund, I get it. But that is a 56-fold growth, all from the power of simplicity and discipline. That's incredible. So, you've got the survivor's mindset, you've got the core rules. Now, let's talk about the long game. This next part is all about how to turn that survival foundation into a real path of persistent, intelligent growth for your future. I want you to imagine the market as this huge, powerful river. You can't win by trying to swim against the current. You'll just get exhausted and drowned. A small account cannot win with force. You win with timing. You win by understanding the river's flow. And in trading, that flow has a name. It's called market structure. You know, that pattern of higher highs and higher lows in an uptrend, or the opposite in a downtrend. Your job isn't to fight the river. It's to find the perfect moment to jump in and ride the current. Now, once you have truly mastered your one setup, and I mean really, truly mastered it, you can slowly start to expand your arsenal. Maybe you consider something like the EMA 20 pullback. This is where you use a 20-period moving average as a sort of dynamic support or resistance. In a strong trend, the price will often pull back to touch that line before continuing on its way. That touch is your entry. Or, for a more advanced technique, the liquidity grab. This is where you see price quickly dip below a clear support level just to snatch up all the stop-loss orders, before reversing hard. By waiting for that grab, you can get at a trade moving in the same direction as the big money. See? Both still rely on our core principles, tight risk and clear signals. You have to understand that growth with a small account isn't some straight line to the moon. It happens in stages. First, there's the survival stage. For the first 3 months, your only goal is to not blow up your account. Keep your total losses under 20%. That's it. Then comes the slow growth stage. For the next 6 months, you aim for a consistent 5 to 10% monthly gain using that one setup you've mastered. And finally, you reach the acceleration stage. But only after you hit key milestones like $500 or $1,000 do you even think about gradually increasing your position size. It's a slow, steady, and unbreakable process. Let me share one last story with you. There is this boy who had a really old, rickety bicycle. Someone asked him, "Why don't you fix it?" And he said, "I don't have enough money to fix it all at once, so I fix a little bit every day." And that's what he did. Each day, he'd tighten a screw, or adjust the brakes, or oil the chain.
And 3 months later, his bike was running like it was brand new.
That boy's journey, that is the journey of a small capital trader. You don't need some massive, life-changing win overnight. You just need to make one tiny improvement every single day. Maybe today it's a slightly better stop-loss placement. Tomorrow, it's one more trade where you follow your rules perfectly. The next day, it's one emotional decision that you don't make. These small, daily acts of discipline, that's what compounds into real, lasting growth. Look, everybody wants a big account. Everyone wants to get rich quick, but the market doesn't reward wishes. It rewards strategy and it rewards discipline. If you're starting with a small account, you are not weaker than anyone else. You just need to walk the right path. Your small capital isn't a limitation. It's your training ground. It's the forge that will prove if you have the discipline to be worthy of a larger account in the future. You know, the real winner in this game isn't the person who starts with the most money. It's the person who refuses to give up, the person who lays that first brick correctly and then just keeps building on it day after day after day. Your journey begins right now. So I have to ask you, what is your first brick today?